Bloomberg Audio Studios.
Podcasts, radio, news.
This is Masters in Business with Barry Ritholtz on Bloomberg Radio.
This week on the podcast, I have an extra special guest. What can I say about Peter Mallouk? He began as an attorney working on things like taxes and trust and estates and consulting for various RIA firms when he became an RIA and eventually bought Creative Planning when it had, a handful of clients and, $35 million. He has since built Creative Planning into one of the nation's largest RIAs and an absolute powerhouse running over $300 billion. Peter is the guy I look to when I want to learn things about how to build a firm, how to grow organically, how to think about acquisitions, how to structure your company, really to become an enterprise as opposed to merely being a business. Peter is also the author of two really interesting books, The 5 Mistakes Every Investor Makes and How to Avoid Them, and his latest book is Money Simplified. Whether you're an RIA or an entrepreneur, whether you're interested in finding out about who should manage your money and what you should look at when you talk to Creative Planning, I thought this conversation was absolutely fascinating, and I think you will also. With no further ado, my discussion with Creative Planning's Peter Mallouk.
Hey, it's great to be back, Barry.
So I didn't mean to imply that the other books weren't interesting. Those are the two most recent books I wanted to emphasize. But let's talk a little bit about your background and your career, which is so interesting. You get a JD MBA from the University of Kansas in 1996. That's an interesting combination. What was the plan for your career with that combo?
Oh, so here was the brilliant plan. I had been an undergrad at KU for quite a while, and I was having an incredible time. My brothers were, 3-4 years younger than me, so they were coming in when I was a senior. I didn't want to leave, and so I thought I'll just stay and get a master's degree. And then I learned that KU was launching this combination thing. Instead of doing a law degree for 3 years and MBA for 2, you could combine them and do it in 4. And if you went in the summers, you could do it in 3. And so I signed up for it with no plan other than to stay at KU a little bit longer.
Don't want to leave.
Yeah, didn't want to leave. That was the plan. I'm having fun.
Your siblings went to the same school at the same time?
Yeah, myself.
KU is a big joint. What was that like?
It was a blast. I mean, it's a really, really fun town. My oldest son just graduated from there. My youngest 2 are going there next year, so I get to relive it, through them a little bit. And many things have changed, but a lot of things are exactly the same. That's one of the reasons I think a lot of people like going back to the schools that they graduated from.
So long before you went to KU, Creative Planning was formed in Kansas. That was back in 1983. What led you to acquire the company in 2004? You were an employee at the time, weren't you?
I was. So I had started out, with an accidental journey to becoming an advisor, and I really found myself as an advisor to advisors. So I would go from one brokerage house to another and one independent advisor to another from morning till, the day was over, and I would do legal work for their clients or give tax advice or do planning or investments. And at some point, the people that were running the financial planning department for Creative Planning, which was a sister company to an insurance company, there were 3 guys that were selling disability insurance to physicians in Kansas City. One of them passed away at a young age. One became disabled at a young age. And the people that were running the financial planning arm had left. And the owner of that firm, this incredible guy, had brought me in to handle the planning and investments for Creative Planning. So while I was doing all this work for other advisors, I was also managing, their 30 or 40 clients that they had at the time too. And that's where, from 98 to 04, I got this sense of, hey, all day, every day, I'm doing little pieces for different people. What if there was a firm that did all of this in one place?
One quarterback to oversee everything.
That's right.
04, you do the acquisition. I mean, you're working as an attorney for a advisory firm. It's kind of hard to write a big check at that point. How did this process go about for you acquiring?
Well, I mean, it was managing a very, very small amount of money, so there was no big check to be written, or I wouldn't have been able to buy it. And he was, very great. I mean, we're talking like six-figure check, right? Spread out over 60 months. So this was not a big operation at the time. And
$34 million,
clients,
not
right.
a lot of money.
That's right.
And now it's up. What is that? 1,000x. You're over $300 billion. Let's talk about how you got there. You, for the first 15 years, did no acquisitions. So strictly organically grew from 34 million to 42 billion. That is a giant 100x set of gains.
Yeah.
How do you grow a company organically that quickly?
Well, I think we were ahead of the game in a lot of things that now a lot of firms have started to do. And I think like we were doing financial planning without a separate fee. We were passive on the equity side. We never used hedge funds, but we used private equity, private lending, very early on for an RIA. We were doing legal, tax, investments, trust services, planning all under one roof. That was definitely revolutionary at the time. Now there are firms, that 10 years, 15 years later started to add those things. We had a very big head start, and the market really responded to those things. Like if you look here 20 years later, where did the market go? On the equity side, it went from active to passive. Well, we were there in the beginning. On the private side, where has it gone? From hedge funds to private investments, we were there very early. It used to charge separately for a planning fee. Now it's more the way creative planning did it. And this idea of adding other services in one place, the market's moving there too. So I think we were just ahead on all of those things. We had a big advantage in that regard. I think when people are looking for an advisor, they like to see usually two things. I think one, they want to see that you know what you're doing. And it's very hard to figure out that somebody knows what they're doing. But they could look at Creative and go, well, Creative's been doing this a very, very long time, right? And if they can go talk to 100 advisors, none of them would have been doing what we're doing back then, right? And so I think they just know, hey, we've been doing it longer. And we've got probably more people, doing these services, more specialties, more people with those designations. We're now divided out into working with ultra affluent people and the mass affluent and having different teams that serve all of these. And I think an investor or a prospective client can figure that out in pretty short order. When my son and I were walking here to the studio, we were trying to figure out where to eat. We didn't have any time. We're gonna have to eat and walk, right? So we're here in New York City, we got in late. We wanted to make it on time here as close as we could. So what did we do? We stopped at a bunch of food trucks, but there was one food truck that said
big long line,
voted best whatever, TripAdvisor, all that. That's the one we stopped at, right? Because it feels like there's some social proof there that his food truck's food's probably better than the other ones. And sure enough, my son was like, if I was in Kansas City, I would eat this every day, for lunch. I think when you look at an advisor, we're both in the profession, so it seems, well, I mean, does it that big a deal to be doing it a long time? Well, I mean, if you get yourself out of the profession, you need a medical condition, right? And you're looking for a doctor, you would like the doctor that's been doing it for a few decades with an enormous team that's invested in all this technology. It's probably already made the mistakes they're going to make, that if something weird shows up, they've probably seen it before. That is creative planning. And so the growth, it compounds because the longer you've been doing it, the more that credibility you have.
So you mentioned you have all these different teams and all these different people. How do you maintain the corporate culture when you scale up 100x? Like, that's a real challenge.
Yeah.
How do you keep all the horses pulling the sleigh in the same direction?
Well, I take this incredibly seriously because, in this business, all you really have is what's in people's brains and in their hearts, right? You got to have people that know what they're doing and they care about people, right? Because this isn't like, we're not a hedge fund, we're not a mutual fund, nothing wrong with those things, but we're dealing with actual human beings. Whether a creative, whether you're a CPA or an attorney or a planner or a wealth manager, whatever, you're sitting across the table from somebody. You have to have that kind of consultative nature about you, or you're not going to be successful, certainly not be able to do right by the client. And so I look at culture a couple things. One, it's who you let in the first place, right? So when I'm interviewing, it's not just who I want in, it's who do I want to keep out. So I'm always the last stop in an interview. Mine's always just a few minutes.
Even today, how many you guys
today,
have over 1,000 employees, right?
2,400, yeah.
So every one of them, you gave the stamp of approval before they came in?
Yeah, and I'll block quite a few.
Really?
Now, they're background checked before they get to me. Somebody's already said, hey, I like them for my department. They know what they're doing and all that. We're not perfect, but there's a lot of screens in here. But what I'm just looking for is, every now and then you have a leader and they're just desperate to fill a role, right? And you really have to, you want to avoid that desperate hire where they bring that jerk in, right?
Right.
Because, I was talking to somebody the other day about, are most people good or most people bad? And we were talking about, well, yeah, think about all the violent crime and assaults and all this stuff. And the reality is most people are good, but one bad person causes so much damage, right? We had someone that became a client because someone was stealing from them, an employee was stealing from them. Well, it turns out they were stealing from 4 other businesses too.
Really?
You know what I mean? Like, so,
wow.
But that's normal, right? Someone who commits sexual assault, it's a very tiny group of people that commit sexual assaults. The problem is the average person does it over and over and over again.
It's not a one-off.
So you create disproportionate victims. Well, I look at it like weeds in a garden. You get that one person in your firm and they're a little bit of a jerk or they're overly self-serving, or they can turn the culture very, very fast and cause a lot of distraction. I think the biggest successes I've had in my career are who I've hired, and the biggest failures I've had in my career are who I've hired. And so I think, like, you look at the social curve, part of it's attracting the right talent, but getting that, sociopath or that kind of like really narcissistic type personality, keeping that person out of your firm. I think that's step one in the culture. Step two is, if you make a mistake, and we make mistakes, correct it fast. I'm really bad at this, by the way, Barry. I'm like, really?
It's the hardest thing to do.
Yeah,
we all know the expression, hire slowly, fire fast. But it's it's much harder to do than it sounds.
Yeah, and what's changed my thinking on this is I used to just drag it out and drag it out and drag it out. And this woman in our firm who started with me early on, she came to me once. She said, like, hey, you think you're doing this person a favor, but what you're really doing is you're punishing the rest of us. And that just changed my thinking about it. Overnight. Like, now I feel like you're sending a message to the rest of the firm of what you'll tolerate,
right?
Whether it's incompetence or ill will or whatever. So getting people out, quickly is another very big piece of it. And then the other part is, who do you make a leader? You can't just make the leader the person who was really good at something, right? Like, you can't say, okay, you're really good at taxes, I'm going to make you the head of the tax group, or you're good
it's a different set of skills.
Yes, you really need somebody who embodies the culture, where someone was just asking us, we do this thing called Ask Me Anything at Creative Planning, where every 6 months, separate from the other things we do, there's just an hour people can ask me whatever they want. And somebody said, well, what do what's the message you want your leaders to give? And I said, I want my leader to be the message, right? If you have to ask what the leader should just personify what they want, what the example is of what it's supposed to be. That's the type of person. You got to do all those things intentionally. Culture is very fragile. I think we've been great at it, and I think a big part of it is we've got the right leaders in place.
Let's also talk about your headquarters. You're in Overland Park, Kansas. The typical investment firm seems to be East Coast or West Coast. What are the advantages of being located in Kansas?
See, this is a happy accident too. Okay? Kind of like how I wound up with my majors, or wound up in the profession. Is just I was born and raised in Kansas City and just was never ambitious enough to go do anything else. One of my brothers moved to Dallas and one moved to LA, and they're both enormously successful. All my aunts and uncles moved to different cities, but I graduated, went back to Kansas City, got a job, and next thing I knew, I was running creative planning. And by the time I even thought about where I was located, creative planning had been too successful to consider anything else. Once I tried to get my family to move 20 blocks, and my kids started, screaming and ran upstairs. So it was clear nothing was going to happen. But it's been absolutely amazing, because to this day in my life, I have not done a coast-to-coast flight. I mean, I travel every week, and it's very easy to get around the country. If you
you're never more than 2.5 hours away from anywhere.
Yeah,
right?
everything's pretty.
Hawaii
close.
is probably
yeah. I mean, continental U.S. right? So everything's really easy to get to. So you need to visit an office, see a team, or give a presentation, or see a client. I can do it, and I also think that there is something to be said for, and I think it sounds cliche, but it's not. Just this Midwest ethics, Midwest work ethic, and kind of the attitude, this bias towards integrity. I found it very, very easy to hire very high quality people, and so many of our firm's partners are based in Kansas City too.
We call it Midwest nice.
Yes.
Which it really is. Yeah. We have family in Chicago. We're there every year for Thanksgiving. Every time we're local, it's like everybody here is just so delightful.
Right. That's right.
They're just so pleasant. I guess it's because they're not in a rush and the real estate isn't as expensive, so people are less stressed. That's what I usually chalk it up to. But Midwest nice is really a thing.
It's really a thing. Yeah, there's a lot of reasons, but it's a real thing that I appreciate more and more every year that goes by.
Let's talk a little bit about the growth at Creative Planning. It was organic for the first 15 years, and then in 2019 you did a few acquisitions. First off, what led you to the decision to say, hey, we've gone as far as we think we can organically, let's take advantage of all this cheap capital around and start doing acquisitions?
So really for us, I mean, it had never occurred to me to even do an acquisition. We were, from the very first month, growing faster as fast as we could possibly handle. It was just moving so quickly. We've always been high. Every quarter in the history of creative planning has been positive net inflows. Every quarter in the history of creative, we've been hiring, right? And we're just growing. But you look at even over that period, Forbes had done a ranking of the fastest growing firms in the United States, and we were number one on that list, and that was 10 years in. It was over the 10-year period. Even then, if you went to an average American city and visited one of our offices, we probably didn't have a physical office. Mm-hmm. We probably had one or two advisors. And in that particular city, we might have managed, $800 million, right? So it was clear to me that I could do this till I was 110, and I was not going to be able to build a national independent firm. I might have had the biggest independent RIA. At doing that pace, we would have continued to be successful. But we had sat around, a few of us, and said, well, what do we want to do? And we said, we have this opportunity to set the standard of what a client should receive from an independent wealth manager. And we looked at our competitors of who else we thought might be that standard, and we thought, we're proud of what we're doing. We thought, hey, this is the right way to do it. This is the right investment approach. This is the right wealth management approach. We have this opportunity to do this. Let's do it, right? And so along the way, we made one acquisition very much by accident, met a father and son that turned out to be wonderful. But what we've observed from them was they grew faster when they were with us. Their advisors all stayed and were very happy. Their clients got more services. They referred more, so their growth rate went up. And we were like, wait a second, we did all of this and we doubled our presence, and that city was Minneapolis. This is the recipe. And we went back and started to call all the advisors over the years that had called us, and the acquisitions began. But organically, we've actually, excluding acquisitions, grown more in the last 5 years than the previous 10. Wow. So the organic growth is accelerated, but the acquisitions have been a nice way to complement it, with our goal being to become more localized to clients basically in every major market.
So tell us about the 401k acquisition you did. That was a substantial purchase, $100+ billion in 401k assets.
That's right. So, we on the private wealth side, we work with the mass affluent. We work with people that have 10 million and up, and we work with centimillionaires and billionaires. On the 401k side, we were basically dealing with 401k plans that were from startup to 100 or so million. Well, we have 60, 70,000 private clients. Many of them are CFOs, CEOs of publicly traded companies. And they would say, well, hey, before you talk to my team about the 401k, how many $1 billion 401k plans do you have? And I would say, well, none. And they're like, well, there's no way. You know what I mean? There's no social proof there, right? And so what this acquisition did was they were one of the three largest independent 401k providers in the United States. A lot of publicly traded companies, multi-billion-dollar 401k plans with tens of thousands of participants. We purchased that group, put it into creative. They've grown quicker because they have more of a wealth management backbone. They've got now financial wellness, financial education. We're able to manage money, add new investments, add lower fees. We just have a lot of negotiating power. So we've been able to do an enormous amount to make the offering better. And they've grown quicker also from referrals from our advisors. And now those 401k participants are also learning about creative planning and coming over to the private side. So it's been a home run all the way around for us.
Sounds like it. You were also very early in the referral program with Schwab, and you recently announced you were joining the referral program with Fidelity. Both those companies have notoriously loyal client bases.
Yes.
How do you get somebody who's custodied with Schwab or custodied with Fidelity to put creative planning first and not think of themselves as a custody client? I know that sounds odd, right, but you know exactly what I'm saying, right?
Well, I think that the thing about those clients is, Schwab and Fidelity are the clear leader. I don't, who's third. I don't know who third is, right?
TD, which is now part of Schwab.
Now part of Schwab, right? So these are enormous, incredible, and I think they're more than custodians. And I think a lot of people just want custody. They want to trade on their own. They're never come. They're not going to come to creative planning. There's people that there are many solutions that Schwab and Fidelity offer their clients, and those people are perfectly satisfied with that. But Schwab and Fidelity give their teams this flexibility to say, look, if the client's best served with another advisor, go ahead and refer them. And I think that Schwab and Fidelity, when they find that to be the case, I think they find creative to be pretty unique in our offering and our expertise. And the client also doesn't lose anything, right? They're still at Schwab or Fidelity. They've still got the same account number. They still got their website. They still got their financial consultant in the branch. They just have an advisor advising them on the account now.
True story. When we launched, we were using TD as our custodian. And we would go on, like you do, we'd go on road trips, we'd meet people, we'd meet existing clients, we'd meet prospective clients. And after like the 12th time someone said, hey, I'm with Schwab, that's where my money is held, love to hire you as an advisor, but it can only be on Schwab. Like you hear that a dozen times and, maybe we should add Schwab as a custodian. Now we got a couple of $1 billion with them. But to get to that point, like it was like, wait, it's a custodian. Where is this intense loyalty coming from? Fidelity, and especially Schwab, it's like nothing else I've ever seen.
Well, there's I think a very intense feeling of safety and security, and the brand both those brands carry such equity with it. And you know what, they should. I mean, they've really delivered.
They've been around for half a century.
That's right.
And done a really good job.
That's right.
All right, so you mentioned all the various services you offer. But when you began, that wasn't the place you started from, right? You were doing some estate planning and other legal services. Tell us about the timeline that you went through adding these different services. Like, when was that aha moment? Hey, let's just wrap everything up in one nice package, put a bow on it, and not have the client have to worry about any financial issues.
Well, I mean, the 6 years prior to creative planning that I was doing, legal advice at one place, tax at another, planning and investments at another. So day one of owning creative, that was the first day. Like that first day, we were like, okay, we're doing wills and trusts, we're doing financial plans, we're going to manage your money, we'll be the trustee if you need us to be. Now, we was me and one other person, but that's what we were on day one doing those things. And what's really changed from then is the scale, the number of people. I think our tax group might be 700 people, and the law group's well over 100 people. And so the breadth and depth of expertise and the credentials and the experience and all of that, the special level of specialization is, far beyond my wildest imagination back then. But the offering itself, the core offering, that was day one.
So when did you first add a head of tax? When did you first add a head of trust and estates or insurance? Because when two people are doing everything,
right?
It's such a challenge. But once you institutionalize it with those hires, I would imagine everything began to explode.
Yeah, the first hire was someone to take over, the day-to-day investing. The second one was someone to take over the legal. The next was someone to take over insurance, then trust, and then lastly, tax. And so that over time, each of those. And of course, when you get the right person, the growth explodes.
How long did that process take before you had those 6 key people in place?
In the first few years, we had certain people in place, but they just weren't the right people, right? So we had to get through to get to the right leader of each over time, and that really finishing it all out was only very recently. We've added services along the way, but really getting it like stabilized and going about 2009.
And you even offer M&A consulting. I mean, Tell us about that. You have that many clients that are thinking about selling a business and need some help.
Well, this is the advantage of scale. So I think about with the number of clients we have, thousands and thousands of them are business owners. So now you're talking about consulting, but we also do outsourced CFO, outsourced HR. We do bill pay, payroll, M&A, managed IT, 401k, cybersecurity testing. So that business owner client, all those things that they care about protecting and that are dollar sign related, they can look to the creative planning business services unit to help them with that. Yeah, we definitely have enough clients to keep all those groups very, very busy.
What about one of the hot new things is the concierge services for the ultra high net worth, where you're essentially taking over all of their bill pay and everything from, buying a car to looking at real estate. How far do you go down that path?
I would say that there's, it kind of reminds me of the saying about family offices. Mm-hmm. If you've seen one family office, you've seen one family office. Right? Like some family offices, they're doing tax for their family. Some are doing just the investments. Some are only doing the private investments. Some are actually doing private investments in-house, kind of creating their own venture capital fund versus buying others. But most of them don't practice law. Most of them don't practice tax. They keep track of the real estate. They handle some private investments, the capital calls. Everybody's different. The line for us is concierge services. I mean, that's a total nightmare. I remember talking to a group.
Couldn't agree more.
Oh my God! Like this, walk my dog, and I need tickets to this show and whatever to this restaurant. I mean, that's like a full blown nightmare, right? And I have yet to see anyone do it successfully. I've talked to some outfits that do it for athletes, and everyone's disappointed all the time, right? I mean, it's a very, very difficult thing. That's not something I'm really interested in doing. For us, from the family office standpoint, we can handle someone's real estate. We can handle their oil and gas. We can handle their bill pay for them. We can help them as consulting on their business, but we're not going to be walking the dog.
Right. The closest I ever get to that is people know I'm a car guy. Every now and then someone has a really interesting car. Hey, the dealer offered me X on this. No, that's way too low. So let's bring a trailer. We'll get you $50,000 more than that. And I've helped people actually sell cars that way. And they've been thrilled that they're not getting a lowball offer from somebody, especially if it's something kind of interesting. But I don't want to negotiate anybody's car lease for them.
Right.
That sounds hard. Right? So let's talk a little bit about some of the M&A you've done. You've acquired, is it more than 40 firms now?
That's right. Yes.
So we've talked a little bit about culture. Let me ask the inverse question. What's the non-negotiables when it comes to acquisition? What is sorry, we're not gonna go beyond this line?
So, there's basically 4 investment bankers in our space that control maybe 80-90% of the deals that are done. And I think they all know that, we'll start out with a Zoom with another firm. It will usually be short, and it will often end short because there's not a connection. It's not going to work. What I have found is that the leader of the firm usually is indicative of the whole firm. Very rarely do you meet a jerk and then the firm is a bunch of wonderful people, right? It's usually really does emanate, from the leadership. And so I am very focused on who these people are, what is their attitude, how do they communicate, and all of those things. And so I'm looking for some sort of indication of servant leadership or collaboration, a consultative nature, kindness, about them. So I think that's the type of business we're in, that consultative business. It's very different. Finance is very, very broad, but there's hedge funds, mutual funds, SMA. Then there's dealing with people, right? So that's one very, very big part of it. The other part is they have to want to do what we do, right? We're not doing deals just to do deals. They have to be planning-led. They have to want to provide all of these services to clients. They have to be able to go that extra mile of, okay, now I'm going to help you with your legal, and now I'm going to do this tax question. It's not just going to be talking about investments. They have to adopt our investment philosophy, right? So they've got to be following the path that we believe is the absolute best way for a high net worth investor to invest. So you do that eliminates, 95%, right? And so for us, we're left with a very small group, but I think that's why our acquisitions tend to be so successful, is that small group we're left with, they really, really want to be at creative planning, and we really, really want them to be at creative planning. And when we see a firm come in, we see their growth on average grow 200 to 300% more. 99 to 100% of their clients come over, their teams stay, people are happy, and it's a big win for everybody.
It certainly sounds like it. So the firm has been a little more focused on creating content lately. That's something I've noticed over the past couple of years. You have a number of different employees posting, sending out market-focused content. Tell us a little bit about how that became part of the firm's growth strategy and brand identity.
There's this very inspiring guy I know that's built this brand around.
Yeah, but I stumbled backwards into that. It was never. It began as just an itch I had to scratch,
right,
and then multiplied from there.
Yeah, you and Josh have been incredible. But I will say that for the longest time, I wrote every single newsletter, right, and I enjoy writing, and I maybe did that for the first 17 or 18 years.
It's a lot of work, isn't
18 years. Yeah, but it's a lot of work. It's a lot of as you more and more things occupy your attention as a CEO, you've got to decide, well, what am I going to do and not do? Well, it turns out there's a lot of people that are smarter than me, right, at creative planning, right?
Or at least better writers than you, right?
I'm sure somebody, yeah. So basically I said I'm going to focus my attention on the books, which I really like writing, and like the one that just came out, and the podcasts. So I've added more podcasts. I do a podcast every month with my friend Jonathan Clements. I do one every week with my friend Charlie Bolello, he's unbelievable.
So Jonathan Clements with the Wall Street Journal for decades.
That's right.
Great background. And Charlie Bolello does some great chart work. I see his stuff on Twitter all the time.
One of the kings of Twitter, yeah.
Let's talk about the most recent book, Money Simplified. first of all, is money all that complicated? Why does it need to be simplified? And second, tell us what else the book is about.
Well, I think it is incredible. I think it's more complicated than it needs to be. I think there are a lot of people that don't understand it, desperately want to understand it better. And I think there are a lot of people that are too embarrassed to admit they don't understand it. And so I wanted to write a book that basically, if you were a teenager, you could pick it up and you could grasp most of the concepts and understand it. If you were a beginner, you would have a book that would really say, okay, this is really going to help me. And if you're a very sophisticated person, but this just isn't your day job, that you could get through this book in 30 minutes and go, you know what, I learned 4 or 5 things in here. And so I basically took all what I thought were the top 50, 60 concepts of money and said, I'm going to explain this as simple as possible and with pictures, as well. And it's been well received. I've been happy with it.
Oh, that's great. Let's talk a little bit about the RIA industry. You always seem to describe it as a messy industry. Explain what you mean by that.
Oh, I think it's messy on so many different levels because a lot of people they think broker or RIA, so that all the independent advisors, their fiduciaries, all their firms are pretty similar. The firms couldn't be any more different. There are so many different offerings within the space, so many different ways of delivering, and the lines have gotten very, very muddied. And also now with so much institutional money in the space, we see a lot of the Frankenfirm concept has really taken off in a big way too. So I think you see some of the biggest RIAs are really no different than Morgan Stanley at this point. I mean, They have their own products. They have they're duly registered, and they're making money on commission. I mean, literally, to me, it may as well be Morgan Stanley. There's no difference from what you experience. And then some RIAs are just pure money managers, which is wonderful. We need money managers. Some of them are wealth management firms, like Creative Planning, and some have multiple services, some don't. Some are roll-ups, some aren't. Some share their brands, some don't. It's very, very messy. As when you come into this space, you really have to spend some time, if you're a client, prospective client, really trying to understand what you're looking for and who fits your needs. And if you're a firm and you're looking to sell, I mean, when you look at the main buyers, most of them could not be any more different in their offering.
So you mentioned the phrase Frankenfirm. I know exactly what you mean, but why don't you define what that is to the layperson who may not be so familiar with that phrase?
Yeah, so to me, a Frankenfirm is just, I look at Creative Planning. We spent 15 years building something, from scratch, right? So we built a very strong tree trunk. We knew what kind of tree it was, right? It had branches. And then when we made acquisitions, we put branches on the tree that fit the tree, right? And the people that were coming knew where they fit on that tree, and we knew where they fit on that tree. But most of the large RIAs are really all acquisitions, right? From they're very small firms. They started to do acquisitions. So if you go to their 50 offices across the country, all 50 of them were acquisitions. So what do you get? You get 50 different leaders with 50 different ways of doing things, 50 different cultures, sometimes even different money management approaches. It's an absolute mess. You know what I mean? I think that because the industry has grown so much and so many people have made so much money in this industry, that hasn't really been punished yet. But in what industries it gets punished eventually? All of them, right? Eventually, the Frankenfirms don't work out. Eventually, the arms come falling off and the legs come falling off, and you just can't fix them when they get too big.
So let's talk about the genesis of that. Back in the 2010s, not that far ago in time, when the 10-year was yielding 1.5%, when there was just no yield on any sort of fixed income, RIAs were thrown off 7, 9, 12% a year. 3-4 times a week, I would get a phone call from some private equity shop. Hey, listen, we want to take a chunk of you. We're looking to buy 10%. We're looking to buy 20%. What's your profit margin? We see your growth. How much? And we're like, we're still really growing. We're not looking to sell anything yet, but call back in 10 years.
Right.
And I wonder, given the fact that we had zero interest rates for so long, I wonder how much those circumstances and all the private equity cash sloshing around led to the rise of all these Frankenfirms.
Well, I think that's part of it, but I think it's way beyond that. It's a perfect storm of factors that really benefited the RIA space. So number one, private equity likes to go where money is moving, right? And we've got money going from brokers to independents. So
that's been going on for 15, 20 years.
And they love massive trends, right? Hey, this is happening. It's going to continue to happen. This is a big thing in my favor. I can make a lot of mistakes, and this will work out. You've actually seen that pay off with some private equity firms, is some of them have made monumental mistakes, but even bad RIAs have done well because of that mega trend. The second mega trend is the transfer of wealth, the massive amount of wealth, that's moving hands now. That's also been helping the RIA space. A third trend is we're seeing consolidation in the space. So they like to be in the early innings of consolidation, right? Of every single industry. If you got dentists consolidating or HVAC company consolidating, if you got one little company, it's worth, a certain multiple of earnings. But if it's 10 of those put together, it's worth more because the earnings are more diversified, they're more reliable. You only need one CFO, one HR person, all of that stuff. So the RA space is highly fragmented. So they see a future. If you look at the custodians, it's not highly fragmented. There's two and a few others. Investment banks, there's two and a few others. Brokerage houses, there's a few and then no one else, right? They see the RIA space is going to go through massive consolidation, and they're right, and we're seeing that now. And then you also see this massive trend of money moving from smaller RIAs to the multi-billion-dollar RIAs. People going, look, I want to feel safe. So all of these trends are mega trends. On top of that, you put private equity loves recurring revenue, right? I'd rather buy Netflix and Apple where people are paying every month. And that the money management business is a recurring revenue business. And every aspect of it is. We do taxes, that's recurring revenue. You have to file your taxes every year. We do bill pay, that's recurring revenue. You pay bills every year. So they love that recurring revenue business. And then there's an inflation hedge, right? Built in just magically. So you have all of these incredible trends that, look, you and I were not thinking about at all when we started, right? I was just saying, hey, how do I do this in a better way to help clients? It was probably a good maybe 12, 13 years before I got a call from anybody and even knew I had anything with any enterprise value whatsoever. I just thought, hey, this is a great way to make a living. I love what I'm doing all day. I've created this thing that seems to be going over very well. But PE has really flooded this space, particularly in the last 7 or 8 years. And they've been right.
So I wanted to come back to PE in a minute, but before we do that, let's talk about the solo practitioners or the small 2, 3, 4, 5-person shop. Even with the wave of consolidation we saw in the 2010s, there's still tens of thousands of small shops. I've heard some folks say they're all going away. That seems a little extreme. I've heard other people say this space is ripe for consolidation, mergers, acquisitions, etc. How do you see either the small firm or the solo practitioner over the next decade?
Well, I think there are some people in our space that love to say that everyone's going to get crushed and go away, and it's very self-serving.
And send us your money.
Yeah, exactly.
Come to us or die.
That's right. If you don't sell to us or hire me as your consultant or whatever, you're going to die. That's ridiculous. I think there's room. You're going to have to be better though. Right, I think that 10 years ago, anybody could open a shop and do whatever. That world is going away, right? So I think what we're going to have is you're going to have, in my best guess on how this turns out, it's like the tax world, right? You're going to have 1 to 4 mega firms. You'll have 10 to 20 regional firms. You'll have 1,000 smaller firms that either specialize in equestrian wealth management or dental wealth management, or they cost less than others, or it's a very, very premium service, or you're just really, really personable person and you're able to maintain a practice that way, but it will be harder. And I think that it's going to be harder and harder to compete with the firm that's lowering their fees, providing more services, has access to investments that maybe you can't get, maybe can negotiate something with a third party that you can't negotiate. But there will be a home. It's just that the bar is going to rise. Just as with bigger firms, for those big firms to thrive, the bar is going to have to be higher. It's not going to just be as simple as buy a bunch of firms and the market goes up. I think that world's coming to an end too.
Really interesting. So you made the decision to work with a private equity shop to help fuel your acquisitions. Tell us a little bit about what that experience was like.
Well, I mean, for us, we've never. So General Atlantic is our minority owner. They own about 17% of Creative Planning. They've been wonderful partners, but we've never used any money from them to do an acquisition. The reality is, we were the fastest growing RA in the country, one of the largest RAs in the country, and that's a lot of eggs in one person's basket. So the decision was basically made, hey, we need to institutionalize this place, and we need to reward the people that have come along on this journey. And so we brought in about 500 employees, are now partners, and that's
really? Because I remember the last time you and I sat down, you were literally 100% owner.
That's right.
There was no outside investors.
That's
there were no employees. You're morphing into something a little more employee-owned.
Yes.
500, that's a big number.
500 and many of them very, very substantively. And then you've got General Atlantic in there, and then we brought in an institutional level CFO. We brought in Ernst & Young and KPMG, wanted to do our audit, wanted to do our tax. Basically just said, hey, look, we wanted the regulators to see, look, we're taking this very seriously. We want our clients to see we're taking this very seriously. When we're doing acquisitions, we want somebody we're acquiring to see that as well. And it allowed for more, easier internal succession in the event that something happens to me. And so that was not motivated at all by using the capital of a third party to do anything, because they've never given us $1 to do anything. They just bought into the company, and that was it.
So it sounds like when you bring in an E&Y and a KPMG, that often is a predecessor step to going public. I don't get the sense that's the top of your list to become publicly traded.
No, it's not. I think that when in our scale, when we're negotiating with third parties to bring an investment to a client or to get something for a client, sometimes the partner wants to see some information, and that information coming from one of the big four is a much bigger deal than if it's coming for like my buddy across town that does my taxes. Do you know what I mean? So that's really, institutionalizing so many things made it easier to do a lot of things, give a lot of people a lot of comfort, and that was a very, very good decision. I have a lot of clients that I personally work with that are CEOs or CFOs of publicly traded companies, and I will never do that. I mean, if we had to go public, for the best interest of our partners and whatever, we had to go public. I mean, I would do what I had to do, but I would not be in that seat for 10 years. I wouldn't be able to do it.
You would eventually kick yourself up to chairman.
Yeah, that's too big of a sacrifice.
Yeah, I could certainly see that being a challenge. So, given where you are today, what are you looking at as the next leg of growth for creative planning?
Well, I think today, we're very strong with the very wealthy and with the mass affluent. We've got an emerging wealth division. We're strong in the 401k space, and we're strong with business owners. We're working towards getting stronger in the foundation space. And I think for us now, it's a question of just getting bigger locally. Where most of the places in the United States where you see a major sports team will have an office, but we're still relatively small. I mean, the reality is we're small. So we only sound big when you compare us to RIAs, but the brokerage houses, Morgan and Merrill and the investment banks,
multi-trillion dollars.
Goldman, JP Morgan, the custodians, Schwab and Philip, these are trillions and trillions. Yeah, they're all 2 to 12 billion, trillion with a T, right? So we are a tiny, tiny fraction of that. We employ the same number of people as the high school close to my office, right? So in the RIA space, it's significant, but it's not significant enough for the average American to know who creative planning is. And I think that's our objective, is we want to be the gold standard nationally for the mass affluent and ultra affluent clients looking for an independent wealth manager.
So you rather famously are known for not going to conferences. I have to ask, why is that? I really had to twist your arm to get you to go to the conference we did back in 2019. Yeah. And I know you're coming to Future Proof 2024 in Huntington Beach in September, but why are you so down on conferences generally?
So I kind of got this reputation from I can't remember, maybe it's Investment News or somebody did a story about this, and they were asking competitors about me, and it was kind of like, well,
who?
They didn't say Peter's a jerk. But it came across like, well, Peter's just too big of a jerk to go to these conferences or something like that. But really, I learned very early on from my clients. I've learned so much from my clients that a yes to something is a no to something else, right? So when you're committing to a conference, you're not usually committing 2 days in advance, right? You're committing 6 months in advance.
Right, that's right.
And that's a big deal. If you have kids, I don't like to commit to things that are far in the future that I cannot move, right? And so I made that. That's part one of the decision. The other part of the decision is I think, and look, I know you put on conferences. Yours are wonderful. Most of them suck. Do you know what I mean? Most of the time you're going and everyone just really wants to get away from home and drink and hang out and go for a hike or go golfing or whatever. And I look at that 2 days or 3 days or 4 days and go, man, if I spent that 20 or 30 hours at night with my family and during the day with actual clients and employees one-on-one, where am I going to get more value? I'm going to learn more, not just serve people more. I'm going to learn more being present. So I have that attitude too. Now my youngest are graduating from high school, so I think the last one I agreed to do, I think, was with you 5 years ago.
That's right.
And the next one I'm about to do is with your colleague Josh here, with your group in September, right?
The fun part about that, the whole thing is outdoors.
Yeah, no, that looks cool. And you have, that's the lineup of all lineups, right? That you have. So it's going to be a very, very interesting one, and it's obviously a very different spin than everybody else. But I also know, my kids aren't going to be home, right? So it's a much easier thing to do for a couple of days.
So the secret is to plan conferences when Peter's children are otherwise occupied. Otherwise, you get no shot. We did that very much on purpose. So I know I only have you for so much time. Before I get to my favorite questions I ask all my guests, I have to throw you a curveball question. You're a minority owner of the Kansas City Royals. I have to ask how that came about because I know your background with them. How did you end up as a minority owner of a Major League Baseball team?
This sounds cliche, but when I was a little kid, I would literally listen to them on the radio while I was falling asleep. They used to start at 7:35 p.m. all the time. There was none of this 3 o'clock game and weekdays or 6 o'clock game. It was 7:35, and they played till usually 11. The games were really long. I'd listen to them every night. The Royals were amazing back then. George Brett, Frank White, Willie Wilson, playing the Yankees every year in the playoffs. Huge fan. And then in high school, I wound up, I talked to my dad into taking me out there to interview for a job. And I was interviewing. They're like, what do you want to do? And I'm like, I want to be a bat boy for the Royals. And the guy just started laughing, right? He's like, no, I thought you were interviewing to, do you want to sell peanuts or do you want to sell, strawberries? What are you going to walk the aisles and sell? It's like, I don't want to do that. We're walking out, and the guy yells. He goes, hey, I call the clubhouse, and they have an opening for a clubby. I didn't know what a clubby was. But the clubby's the guy's like, shines the shoes for the players, does their laundry. There's this whole routine.
You literally do their laundry.
Yeah, literally do it. This is fascinating. I didn't
Delivered fried chicken to Kansas City Royal players. Was that right. During a game, sitting on the bench?
Yeah, that was Wade Boggs. That was Wade Boggs I did that for.
Very Babe Ruth-like.
Yeah, it's crazy. And so, but I was upset because the clubby job wasn't for the Royals. It was for the visiting clubhouse. And I was upset about that. But then I took the job, and it turns out you get to know all the Royals, plus you get to meet all the players in the American League because you're playing every team in the American League,
right.
And you were getting tipped every series. So I was making a fortune. A fortune.
As a kid.
Getting all these autographs, got to know all these players. But the routine before the game is nuts. They show up way earlier than most people think. And
hours
ahead of time. And then they go in and they, hit and field or whatever. Then they come in and they drop all their laundry on the floor and they change their cleats. And then they get into their new, jerseys and new cleats, and then they go out and play the game, and you're shining their old cleats and washing their old jerseys, and then you're getting their lockers organized. Mm-hmm. Then you've got the third inning to the sixth inning to walk around the stadium. Then you're going and getting dinner ready for them and their beers. Then after the game, they all drink and eat and take their showers, do their interviews, and then they leave. And then you wash their clothes and shine their shoes and organize their lockers and put the food away and drive the ones home that were, hammered and stayed late. And you take them to the Adams Mark Hotel across the street. So when the Royals came for sale, they were putting together a conglomerate in Kansas City. And I remember when John Sherman, who's the primary owner, he's the greatest guy. And he's like, I'm going to walk you through. I'm like, John, I don't need you to walk me through this deck. And he's like, no, I'm going to walk you through. I'm like, I'm 100% in. I'm just Kansas City through and through, Royals through and through. And it was like a not even a thought about it.
All right, so let's jump to our favorite questions that we ask all our guests.
Yeah.
Except I'm going to modify this because I know some things about you.
Okay, good.
And 2 of these questions won't work for you. But let's start with, who are your mentors? Who helped shape your career?
My mentors aren't, famous people. I really just early on got to work with somebody who had the most positive attitude in the world, and he was just so gracious with everybody around him. And I saw the impact that had on everybody around him all the time, with his family, his friends, his colleagues at work. And it really showed me, how important that piece is to the puzzle. He was not brilliant from a finance perspective. And then I also worked with someone who was brilliant from a finance perspective, but was not positive with the people around him. And that combination of the two was really the ultimate, lesson. And I just combined that with my parents, kind of that classic immigrant, work like crazy, love everything about your country all the time, no matter what. And I think just the positive attitude. My parents, every wedding they left was always the best wedding they'd ever been to, right? And so I remember I had a girlfriend in college, and we were driving home, and her parents were like making fun of something from some wedding we were at. I'm like, I never heard anything like it. But that's like, turns out that's kind of normal, right? But I just being around people that were so positive and so negative, so hyper, both at the spectrum, I think that was probably the biggest lesson for me. I don't think people need to have, people always think they have to have a mentor that's like, I get calls all the time, well, like, you mentor me. Like, and I go, what does that mean to you? Oh, we go to lunch every month, and you can't do that with everybody, right?
Right.
But in the world we're in today, I mean, a mentor could be on Twitter. Do you know what I mean?
Right.
Like
you can absolutely have remote mentors. They don't have to. Yeah. They don't even have to know they're mentoring you.
That's exactly correct. That's correctly. Exactly.
And I've heard some stories about people who have said, some people on the show have said, well, these 3 people have been my mentors. They have no idea about it.
Right.
And it's really, really interesting. Yeah. So normally I would ask you, what's keeping you entertained? What are you reading? What are you streaming? But with you, I want to ask, tell me about the music shows you've been going to. What have you been doing in your evenings, in your spare time?
So following you on Twitter, I know you're a big concert guy. It seems like your genre is like 70s. Is that pretty...
So I have really broad taste. It's the Great American...
You went to Sarah McLachlan too. Like I remember that. Yeah.
So wow, you really... So it's the Great American Songbook, and everybody from Ella Fitzgerald to Frank Sinatra.
Got it.
To classic rock, to 80s and 90s, to jazz, to classical, to blues, like even hip hop, up until like my line in the sand is the Beastie Boys, Paul's Boutique. That's kind of where
that's as far as you'll go.
Stopped. All right. but I'll listen to
like
pop,
1993 or something like that.
I'll listen to pop. I'll listen to Taylor Swift, any of the big singers.
Yeah.
What's your musical genre?
So it's been great having I used to own music stores in college, and I used to DJ even after college, weddings, everything else. And one of the things you do in a music store to kill the time is you would just play every album that ever came in, right? So it became a very expansive list of things I would be willing to go to. And really the only genre I was not a big fan of that was major was country, but my kids have changed that for me. So now I've been to Luke Combs and Morgan Wallen, which I would say were two of the best concerts I've ever been to.
But those are very new. That's right. That's not
Hank Williams. Yeah, it's not Hank Williams. Yeah.
Right. They're very interesting. Yeah. It's like country rock.
Right.
Almost.
David Allan Coe, pretty cool. But I mean, most of the old stuff is not for me.
You like so when I think of Lynyrd Skynyrd or Allman Brothers or Marshall Tucker,
I would do all of
those
that.
Those are all rock with a country influence.
Right. That works.
What you're describing is country with a rock influence.
Correct. Yes, very
right?
Exactly correct.
I know my genre.
That's right. I've used my daughter as a cover to go to every Taylor Swift concert that she's
ever
you have?
Done.
Yeah, so
my favorite thing I saw on Twitter last week was, and he told the story on Bloomberg Surveillance the other day, Muhammad Alarian got all the women and the Swifties in his family in Paris to go see a show, and it was his wife, his daughters, and a bunch of their friends. And the last minute, he said somebody canceled. So he puts on a pink shirt, and he goes, and somebody recognized him, took a photo of him, and tweeted it.
Oh, that's
and
hilarious.
It went a little viral.
I saw that, actually.
Hilarious.
Yeah, that is hilarious.
How many? I would never have picked you for a Swiftie, although I find her music fun and interesting.
Well, I think she's got to be the best all-around artist of this generation.
For sure.
I the first time I went and saw her, my daughter was very, very young, and it was her first tour. Mm-hmm. And I remember I was like, oh, there's this guy on a guitar. He seems pretty interesting that's opening. No one was paying attention.
Right.
And it was Ed Sheeran. It was hilarious.
Kidding.
Yeah.
Wow.
So I got to see that. And then you get a little nostalgic as you get older. So you start going to concerts you wouldn't even go to when these bands were around.
Absolutely true.
So I'm doing that all the time too. Like I'm going to see Sarah McLachlan's on my calendar, the Bleachers, who are newer.
Sure.
They rolled out a fun.
I know the Bleachers.
I'll go see Lionel Richie soon. Gonna go see Bruce Springsteen again.
Right. Are you gonna catch the Rolling Stones on this tour?
I'm not a Rolling Stones guy.
I'm a Giant fan, and I just don't want to go to Giant Stadium.
Oh, okay. I'd like to see them play Sympathy for the Devil and then go home.
Right. I saw them in Atlantic City on the Steel Wheels tour. It was like an 8,000 seat hall, and it was awesome. But the bands that you might not have seen, I have this discussion with people all the time. Never a Hall & Oates fan.
Yeah.
We saw John Oates in like a 400 seat room. Yeah. He's like people who can fill stadiums. They are entertainers, and they know how to entertain. And you're getting a stadium show with 500 people.
That's pretty awesome.
We see Ricky Lee Jones every time she comes through town.
Yeah.
Also, small venue, she's amazing. Or Amy Mann, or go down the list.
So I love that. So REO Speedwagon was touring. They're doing like huge, stadium arenas, whatever. But most of these bands do like their opening shows kind of like a quiet practice show. So the beginning of their tour was in Salina, Kansas, just like a tiny town 5 hours away. And they did it in this little arena that holds maybe, 2,000 people.
That's fantastic.
It's like Tony's Pizza Arena or something. So I went there. My friends were like, they're coming to Kansas City. I mean, I was thinking, this is going to be awesome. And sure enough, it was just absolutely incredible.
Anytime you get to see a big name.
Yes, in a small.
Or even though, I haven't seen Journey. But I know but I'll tell you who, and again, a lot of this is 60s, 70s, 80s. I've seen Steve Miller a couple of times in small venues.
Yeah.
He's amazing. We saw Peter Frampton. I mean, Frampton Comes Alive was the best-selling live album for I don't know how many decades. It may still, as far as I know, that may still be the best-selling live album of all time. Seeing him in with 3,000 people, he was feeling,
cool.
Giant. Who else have you seen?
Oh, God, I'm just trying to think. I saw the Killers recently. That was one of my favorites for sure. They were incredible. I just saw last week a band called Cake, which is like a
reluctantly crouched at the starting line,
that's exactly
waiting
right.
and pacing.
Yes, that's correct.
So Comfort Eagle.
Yep, that's right. They were amazing.
I have 3 or 4 albums of theirs, and they're all spectacular.
That's right. They're fantastic.
All spectacular.
They're fantastic.
Let me give you the 2 that'll make you jealous.
Okay.
John Fogerty at Radio City, his opening tour. By the way, his 2 sons are his backup band, and they're all
that's
great.
Cool. So I learned how old I was getting when I went to a couple concerts. I saw Cheap Trick, who I think best rock and roll song of all time is Surrender. I'll Die on This Hill. But anyway, they were playing, and his son was the guitarist. And then the next week I saw the Eagles, and as you know,
Glenn Frey is
Glenn
gone.
Frey passed away, but his son replaced him in that
Sounds
concert.
like him?
Sounds exactly like him, plays the same guitar. And then, then I saw the Foo Fighters the next week, and his daughter comes on and Dave Grohl's daughter comes on and sings a song. And I told my wife, I'm like, I am so old, that I'm now watching these bands' kids play at their concerts.
That's right.
Yeah.
James Taylor brings his kids out to sing with him. He's got a son and
a
daughter.
Seeing him in about 2 months. He's coming to Kansas City.
His tour is always great. The one that might make you jealous, I don't know if this is exactly your genre, and I don't even know how I got these tickets, but at the Bowery Ballroom, which is like a basement that holds 200 people, I saw Chrissy Hines and the Pretenders.
Oh, they're coming to Kansas City next month.
Can I tell you something? Yeah. Go see the show.
Okay.
She is great. The replacement musicians she got, they're just really really awesome. And I'll see Steely Dan every time they come through town. Okay. I'm definitely on the verge of the boomer music. Right. We just saw Neil Young at Forest Hills outdoors. Cool. Oh, he's just great. What a great show.
Yeah.
All right. Sure. So much with fun with music. Let's jump to our last 2 questions that people seem to really like, which is, what sort of advice would you give to a recent college grad interested in a career in either investment management or becoming an advisor?
So I would tell them, pick your starting place very carefully. Pick the firm that you're going to go to out of the beginning, because that can really start to dictate your destiny, right? Do you want to be on the brokerage side? Do you want to be on the independent side? Do you enjoy sales? Do you enjoy advising? Really try to get to the right place as close to the right role as possible. If you're given a choice like, hey, you can make X $1,000 and be in this group, or you can make more and be in that group, choose the group that is more where you want to be in the long run. I've found that proximity is a very big indicator of success. Who you're around. Are you in the right company? Are you around the right people? If you're at the right company with the right people and you do the right things, great things are going to happen. But you can do the right thing, be in the wrong company or not around the right people, it's not going to work. So those first decisions are really important.
Really, really interesting. And our final question, what do you know about the world of investment management, financial planning, building a firm, entrepreneurship today that might have been helpful 25, 30 years ago when you were first getting started?
Well, I think when we started doing what we were doing 20 years ago, I set it up that I want to do all these things in one place and have this investment philosophy because I thought it was the right thing to do for the client. I thought it was fun to give advice that way, that people really benefited from it, got a lot of positive feedback. But I didn't really think about it being an enterprise. Mm-hmm. That became accidental. And really the effort to go, hey, this is an enterprise. We can really, grow this in that strategic way probably came about 10 years later. If I had a time machine, I would have made that light bulb go off on day one and accelerated a lot of things.
And I'm going to give you credit because you're the person who first put that idea in my head a couple of years ago, that you're not building a firm, you're building an enterprise, and that's a big difference.
Yes.
Thank you, Peter, for being so generous with your time. We have been speaking with Peter Mallouk, CEO and President of Creative Planning. If you enjoy this conversation, well, check out any of the previous 500 or so we've done over the past 10 years. You can find those at iTunes, Spotify, YouTube, Bloomberg, wherever you find your favorite podcasts. And check out At the Money, my new podcast, short 10-minute conversations with experts about topics that affect you and your money, earning it, spending it, and most importantly, investing it. At the Money in the Masters in Business podcast feed. I would be remiss if I did not thank the crack team that helps put these conversations together each week. Sarah Livesey is my audio engineer. Atika Valbrun is my project manager. Anna Luke is my producer. The head of podcasts at Bloomberg is Sage Bauman. Sean Russo is my researcher. I'm Barry Ritholtz. You've been listening to Masters in Business on Bloomberg Radio.